I still have my nickels. When I first did a video on nickels several years ago, I said that nickels were the perfect currency hedge. If there's deflation, the fiat portion goes up in value. If there's inflation, the metal portion goes up in value. The only catch to that strategy is that right now it is illegal to melt down the nickels, which means that when I had bought my nickels, they were the metal portion was worth less than the fiat portion, and the price more than doubled, almost tripled, but I had no way of cashing that in. So I still have my nickels for the same price I got them, not able to cash in. Now, if they replace the nickel with something else, then you could melt the nickels down. Just like with silver, when they replaced the coins that used to be silver, you can melt down the silver. And in the last several years, they still haven't replaced in that time period, they hadn't replaced the nickel with something else. Interesting. And of course, you know, I'm gonna do a little bit of a spoof here. Nickels are the only real money because the only coins that you can get in America where they are worth their face value or more are nickels. In fact, nickels are money. You know how they told us historically? See, we've got a wartime nickel. We've got a nickel. During World War II, nickel was so valuable, they debased the nickel by replacing the nickel with silver. They debased the valuable nickel by putting that junk silver in it. Oh, look, and the nickel thing is a little P in the back here. I don't know if you see the P on the top of the wartime nickel. There's a P on top of it on the left. I don't know if you can see this thing. But yeah, that's kind of like my little parody here about nickels. And in fact, in 2006, on the London Metal Exchange, they defaulted on nickel, right? There was a default on nickel in 2006 because nickel is real money. And there was a nickel shortage. And it actually spiked the price. So if you look at the Kitco chart, you'll see, you know, there was a nice spike in nickel. You know, I mean, going in the last 5 years, it's got to be manipulation. Look at the manipulation. In March of 2008, nickel was almost 15. Then it fell to under 5. That was a bankster takedown, right? 15 to 5 with a bankster takedown. Then look, nickel fought its way up, right, almost to like 13. The bankster smacked it down to 8. So yes, nickel is money. We got the bankster smackdown. We've got the default on the LME in 2006. We've got we've got the nickels being debased during World War II because the valuable nickel was replaced with the cheap silver. That's all. I'm just all fabricating a story there, which isn't true. So what the meat of this video is about the silver market being cornered by the flash mob. Now, in 1980. They said the Hunt brothers cornered silver. Well, it wasn't just the Hunt brothers, but they were a key. They were a key component of the price action. Of course, what had influenced them was things happening in the currency markets. The world events and currency markets influenced the Hunt brothers and the people buying silver. So it wasn't in a vacuum. Out of the blue, they didn't say, let's corner the silver market. There are things happening. So right now, in the last few years, out of the blue, there wasn't people buying silver. There were things happening. Now, there wasn't one party. You can't put your finger on one person or a few people for this silver market, quote, cornering. From the perspective of, I guess from an outsider, they would say the silver market was being cornered by the flash mob. Let me explain. So see these nickels, the only real money? What would happen if just all investors put 5% of their portfolio in nickel? The price would super spike. How much nickel is there per person on the planet, right? What would happen if millions of people decided that they're going to go all in nickel? What would happen to the price of nickel? The people in the industry would be saying the flash mob is trying to corner our commodity. That's kind of what some of the outsiders see in silver. They saw a flash mob in 2011 trying to corner the market. And you can't say it was all Max Kaiser. You can't say it was all Mike Maloney. You can't say it was all Eric Sprott, because any one of those people, if they were not a part of the market, it still would have happened the way it happened. It's an amazing, fascinating phenomenon that didn't happen in a vacuum, right? The whole thing that's going on with Bitcoin is not happening in a vacuum, right? The whole silver Bitcoin story would not have worked in the dot-com era. It wouldn't have. I mean, if someone tried to do, I mean, because there were world events. We're in the greatest depression right now, I believe. And in these depressions, there are currency events. Like in the Great Depression, right? The currency event was the gold nationalization, right? You know, I don't say confiscation because people got something for it. Of course, the gold was revalued later, but that was a currency event because, of course, currency and credit are intermingled, right? Money and debt are intermingled, right? It's the whole fractional reserve banking thing. They're all like this, right? So, in my opinion, the business cycle is caused by the credit cycle, the cycle of credit. And it's like a generational thing. The Great Depression happened many years. It wasn't an overnight thing, right? So what we're seeing now is a multi-year event. I think in 2011, a lot of people expected this generational depression event to be over in a few years, and that was too soon. It might take more years to see more of a currency thing happening, right? So I don't think I have the knowledge to really time this thing, right? You know, this whole Cyprus bank run thing, that was kind of like 4 years late, right? I mean, 4 years ago, that's when we were expecting to see like Cyprus kind of bank runs, but I mean, really, the timing on this thing, because we're talking about a many-year event, I mean, in the Great Depression, you had some big stock market rallies, right? So in these depressions, you can have these huge stock market rallies, and it's really dangerous, I think, to try and short these markets unless you got to be really looking at these things closely, I guess. I'm not trying to short any market, so I can't speak up from that perspective. But what I want to say is that the silver market is finally being watched by a lot of people, and they're becoming more aware, who are trying to understand the phenomenon that happened. 2011 in silver was a big phenomenon. It was very noteworthy from a market perspective. Of course, we have guys like Robbie G. I mean, he's telling us stories about how he has clients who are billionaires and whatnot. So he's watching us as as a hobby, or is he watching us for work? I know there are a lot of traders who are watching us, like Moments in Trading and other guys like Josh Van Mullen. They're watching us and stuff, and they're participating now. This guy from Europe who's doing a dissertation on the whole silver market, right? And he helped me articulate my thought as far as the shorting, as far as the what's it called? Oh yeah, as far as the cornering of the silver market by a flash mob. And I think what happened in 2011 was actually kind of a rational market thing. I think that when you have events like this, the market's going to experiment and try things and see what works and see what catches. And the Bitcoins are in that phase right now. So what's next? What's going to be the next currency experiment? I don't think we've seen the last thing of gold. I think that gold is, is on a longer time frame for this thing. So I'm just saying, we're in a many-year thing, and just so good luck, everybody. And yeah, look at here, nickel is money. Nickels were debased by adding silver in the World War II. Ah!